Net present value, or NPV, is the difference between the present value of cash inflows and the present value of cash outflows over a period of time. NPV is used in capital budgeting and investment planning to analyze the profitability of a projected investment or project. NPV is the result of calculations used to find today's value of a future stream of payments. To calculate NPV, you need to estimate future cash flows for each period and determine the correct discount rate. NPV accounts for the time value of money and can be used to compare similar investment alternatives. The NPV relies on a discount rate that may be derived from the cost of the capital required to invest, and any project or investment with a negative NPV should be avoided. Let's take a look at two of our investments in our examples. First investment, we invest $100,000 and then for the next 5 years receive $25,000 each year thanks to that investment. In the second investment, we invest again $100,000, but then we receive only $20,000 in the following 4 years, but $45,000 in the very last 5th year. Let's see which of the investments would make sense for the company. I'm going to use NPV function for that. In the cell D48 equals NPV, and Excel gives me a hint. NPV returns the net present value of an investment based on a discount rate and a series of future payments, negative values, and income, positive values. You can see that our investment is shown as negative value and our income is shown as positive values. That works for us. We also have a discount rate of 7%. Let's grab the formula with tab, and then I'm gonna take my rate in the cell E37 and I'm gonna anchor it with F4 function 4, because I will use that formula, copy and paste it into the cell H48. So I want this cell to be anchored for that reason, comma, and my values are given to me above. I'm gonna grab all of them, the investment and my cash inflows after the money were invested. Beautiful, the formula is ready. I'm gonna click enter and I see that my net present value of the first investment is $2,341.06. Beautiful. Control C to copy that formula, and I'm gonna paste that formula in the cell H48. Control V, escape to uncopy, and F2 function 2 to check the formula. That's correct. That's exactly how I want the formula to look like. My discount rate first, and then my cash flows for investment 2. And I can see that my NPV for the second investment is negative $160.18, meaning that my second investment is not a good one. So I would pick the first option in that case scenario.